The ever-growing new investor series is back at it. We have the one and only Jeffrey Suey with us today. How you doing, Jeffrey?
Doing fantastic. Thanks for having me, Michael.
Absolutely. I love that sign behind your head, doer versus thinker. Totally taking a
Oh,
right turn on you. I love that. I love that. That's
that's a big one for me. That's why I got it up there. I got to remember.
yeah, absolutely. I definitely believe doing the work obviously is a big thing to me. So, but Jeffrey, before I just took that right turn out of nowhere, tell us, who is Jeffrey, where you're at, what's your investing journey thus far?
Sure. So I actually run a university for coaches. That's my day job. I've been doing that for about 15 years now. I've been in the training and development and coaching industry for 24 years now as well. I got my start working for Tony Robbins as one of his coaches
Oh, nice.
in 2000, and where investing started for me was actually in a prior life. I actually, when I was in college, I was studying music. I went to Manhattan School of Music, conservatory up in New York City, and at that time, I was already reading investing books, and I was kind of trying to fill my brain with that information. But it took 20 years for that knowledge to percolate into anything of any substance at all. I was super slow. You talk about get rich slow, get rich for sure.
Right.
Um, it wasn't the process wasn't slow. I was slow.
Mm.
As a creative type, I have not entrepreneurial ADD. I just have creative ADD. I'm always coming up with the next idea. And
Mm.
the novelty, that dopamine rush, keeps me wanting to change something rather than repeat it, which
Ah.
is so critical, you know. So anyway, bottom line, I kept adding a lot of information into my head. When I was working for Tony Robbins in 2000, I read Rich Dad Poor Dad, as many of us did. But again, I made my first real estate investment purchase only 3 years ago.
Hmm.
So that was like 20 something years into that learning journey.
Mm.
Now, the other side of it, though, as a coach, I was actually helping others in their careers, in investing. Was busy talking to everybody else, not doing it myself. I was doing it thinking with them.
Right.
And so one of those investors was my mother. I was coaching her past some of her fears. She actually ran for many years, a large regional real estate company here in the Southeast. I'm in Florida,
Mm.
and she was going to make this little purchase for a little condo, and she was really worried about it. So I just helped her work through the psychology of that.
Mm.
And then she made that purchase, and then she made another purchase and another purchase. And we actually just looked at this the other day. If I was to qualify my entire family's portfolio, including myself and my mother, it'd probably be about 2 million, somewhere between 2 and 2.5 million in assets once you subtract the mortgages. I believe it's 17, 18 units, something like that, including the seven that I'm an owner of or a part
Mm.
owner of as
Yep.
well. And so for me, the recipe, there is no doubt the recipe was somewhat knowledge.
Hmm.
But then besides that, one thing that I did, even when I left Tony, I went out on my own, just working my own business. I was totally broke.
What year was that? Just so I get a timeline
That was
going here.
2001. So I worked for him for about a year and I left.
Okay.
And I was at a low point in my life. I was literally living in a trailer on someone else's property
Mm.
in the North San Diego County
Mm.
area, up in the hills, in a little place called Vista, California.
Mm.
And it was not a pretty picture, but
Not a
I had
glorious
already
life,
worked.
huh?
Yeah, and I had already worked for Tony Robbins. I mean, he's a like super positive thinker type and everything,
Mm.
and so I had all the resources, but I wasn't in a stage in my life where things were going very well. So I said, I need to find a way, based upon what I learned, to start to move things in my favor, to start to accrue some resources and some assets that are really going to make a difference for me long term financially. And so I got this manila envelope out and I wrote on the envelope Financial Freedom Fund. I
Ah,
stuck it on my wall, and every day, literally every day, I put $1 in that envelope. And I made it a ritual for me at the time. It wasn't like an automatic transfer or anything
right.
like that. I made sure I'd reach into my pocket, find the couple dollars that I had to my name at the time, and put one of them in there to
Mm,
just get the motion of saving, getting my money a little bit better than it was. God, I had never saved before in my life.
mm,
And, after a year of doing that, I had $1,000 in that little envelope, started putting it into a savings account. Eventually that became automated,
mm.
but it was the mindset of it. And like to get a reward from feeling like, hey, that's moving me in the direction of the financial freedom marathon.
Right.
And feeling better, feeling good about that rather than feeling like, because most people, their beliefs about money is that money is where all the value is.
Mm,
And if they give money away to something, whether it's savings or investing in a property or buying a stock or whatever, well, I'm losing value. I'm not gaining value. It's like that's less money for me. That's where the value is, right? And of course, in Rich Dad Poor Dad and much of the other education that I've seen, it's like it's not just about. I mean, money is a way to transfer value, but value is inside of assets that appreciate or that cash flow, etc. Right?
mhm.
So I had to make that mental shift before
Mm,
I automated it and had it snowball. And
good.
I never made tons of money. So my savings journey was $5,000 a year into a Roth.
Mm,
That
okay.
was it. I didn't have a lot of other savings other than that. But I did that for like over a decade.
Mm,
And so a couple of years ago, 2018, I believe, that had piled up, and I saw that just passively investing in the S&P was not going to do it for me, especially at the amounts that I had invested. And I read your book at the time as well. And so finally, after getting together with family members that also were willing to pitch in, and I had convinced enough that this was the best way forward and they were willing to support the process. I thought that was critical as well. There were multiple ingredients here that needed to come together. We finally pooled our cash and we made a cash purchase at 380,000 for that fourplex
mm,
in downtown Jacksonville, Florida.
okay.
And so that we were second in line and we bid it up about $5,000 beyond what they were asking for. And it was a cash purchase. So it ultimately were able to get it to go through. And, luckily this market has a lot of people moving to the
Mhm.
Florida area. Jacksonville has a lot of diverse businesses, and I used just for a proof of concept, I used a set of location indicators from Neil Bawa. I'm not sure if you're familiar with
Mhm.
Neil,
Mhm.
the multifamily guy, and that part of Jacksonville, that part of the downtown called Springfield, it's kind of a historic area, looked like it met those indicators. So that plus running the numbers made it make sense, and that was really the first move. So I got my first four instantly, and that changed everything. I mean, coming to closing, of course, we had already put tons of cash into it, but coming to closing and having them give me checks. Here's all the rent deposits. Here's the rent for this, the prorated rent for this month.
Mhm.
I suddenly realized this is very different from like buying GE stock.
Right.
You
Yeah.
know, you know, now you have a real cash flowing asset, something that is going to continue to pay you over the lifetime of the asset, as long as you're a good shepherd of
Right.
asset.
So
So
Jeffrey, real
yeah,
quick, that was 2018. You bought that first fourplex,
yes, yep.
and what has happened since then? So you paid cash for it. Did you go back and refi it? Is it still free and clear
Yes.
today? What's going on
Yeah,
there?
so about 6 months into owning it, we did a cash out refi. We did a 70/30,
Okay.
so super conservative. At the time, of course, interest rates were ridiculous. So I think we got 3.375 was
Yes.
our
Nice.
number. I think my payment, not including insurance and taxes, is 1,200 a month
Mm,
on a fourplex where every single unit is at 1,000 or more per
nice.
month. Now, as you probably know, Florida has been ridiculous when it comes to taxes
Hmm.
and especially insurance. Our insurance has somewhere between doubled and tripled since
Wow.
then. So that it's definitely weighs on that cash flow as well in
For
a
sure.
pretty significant way. But otherwise, that's been a phenomenal purchase for
Yeah.
us.
I what since again you bought it in 18, Jacksonville's seen some wild appreciation. Do you think the property's doubled in value since you purchased?
I don't know about that. That area, I mean, as Neil Bawa says, real estate's hyper local. That
Hmm.
area, it's a historic district,
Sure.
and the middle of it has gentrified like crazy.
Mm.
But we're on the outskirts. That's one of the
Oh,
reasons
okay.
why we got a really good deal, is that we are
Hmm.
at the very edge of that historic district, and
Sure.
right across from it is more of the ghetto
Okay.
and the lower income areas, right?
Okay.
So it's got to have time to spread out. I do believe we've had some pretty significant. I mean, I think at the time it was. I mean, it appraised at 380, which is where we bought it at,
Hmm.
and I can't imagine it selling for less than 500 today.
Okay.
So I think we
All right.
have a reasonable amount of
Yeah.
appreciation in the
30% or so.
asset already. Yeah.
Very, very cool. The other thing I wanted to talk about is you hear a lot of people stuck in analysis paralysis. I hear from endless numbers of engineers and computer science and math majors that they're just stuck in the spreadsheet. You actually brought up something that I don't recall ever talking about, the creative, right? You're out there seeking different ways. You're excited about the learning. Um, so let's talk about their creative, because it's being stuck is being stuck, whether you're in the spreadsheet or not.
Yeah.
What was the key to kind of break that, you think?
Um, when I think when anyone is stuck, creative or not, all of that conversation, like if you ask an investor, why are you not taking the obvious next step? Because there's always an obvious next step. You just look at, here's my constraint, here's the challenge I have. There's always some kind of action that could be taken. And if the answer to what the issue is not that, like I got to do that, I got to do that next step, then regardless of what the story is about the stuckness, it's always fear, and the fear is usually in place because of a limiting belief. It's
Sure.
just somebody's thought process, what's invisible, and usually they're not going to tell you what that really is. It's usually what sounds good, what meets
Hmm.
the ego need,
Yeah.
basically. So for me, um, I had already invested in a single family home in 2000, I think 7.
Hmm. Of
So it was perfect timing for it to fall off a cliff, of course.
course.
Um, Usually the first investment I make in an area is it's the worst timing possible. It's like when I get in, it's like the Kramer indicator. It's like everybody
Yeah.
should get
It's
out,
the top, it's
basically.
the peak. Jeffrey got in.
Yeah, I got in like that. And again, as a creative type, someone who gets excited about emotion, I'm a good representation of the herd, of
Mm,
the most excitable, most emotional herd.
mm.
So that awareness is important. But really, what I'll tell you what kept me stuck personally. I had gotten into a point where after 15 years of trying, like investing in the stock market, I studied with financial traders for a while and did the day trading thing. I traded options, lost money on that, invested in that single family home in 2007. So I had a lot of L's on my bedpost. Okay. And so I was lucky. I'm lucky enough to have a mastermind of other entrepreneurs and investors that we get together every 2 weeks, and we just get on the phone and we collaborate, and we get on the hot seat and tell people tell each
Yeah.
other what's going on, and we get feedback from each other.
Yeah.
And so one mastermind, I was talking about my finances, which at the time were not phenomenal. I had
Mm.
savings, like I explained to
Right.
you. This was around probably 2017, 2018.
Mm.
And I told them, I'm not much of an investor. I just invest passively in the S&P 500. That's it.
Mm.
And one of the members of that mastermind, his name is Matt Recor. He is a very successful real estate investor in the. I think he's up in your neck of the woods.
Mm.
He's in California,
Okay.
and he flips, and he's accrued more than 10 million in assets over the last decade or so. And he shot back at me. He said, "Jeff, you've got to correct your language."
Oh,
I said, what are you talking about? He said, "You said I'm not much of an investor. You've got to
right.
correct that language pattern that you said there.
I like it.
It's like you're becoming a better investor, something that would be something that wouldn't make you so fearful or make you so constrained or have an identity that would be limiting for you, right?"
Mm.
And I like teach this stuff. I'm supposed to be the coach, and I'm like, yeah, of course, but I can't.
Yeah.
It's harder
Yeah.
for me to see it within myself, right? It's
Yeah.
easy to see
Makes
everybody
sense.
else's issue.
Mhm.
And so I stopped and I said, you're absolutely right. I've got to work that language piece out.
Mm.
And it was just a belief that I had accrued over many years of things not going as well as I would have liked, because I figured that's what that means to me about me. Um, and that day, I'll tell you, had I not had that conversation with Matt and the rest of my mastermind that day, we would not be talking today.
Mm.
We
There you
wouldn't be
go.
talking, because when I saw that limiting belief, I said, wait a second, that's what's keeping me stuck, because I had cash available now. I
Right.
had people that were willing to support the process. I had all the resources anybody would possibly want or need to get on the property ladder, and I still wasn't really fully committed to it.
Mm.
And I had the education, I had it all, right? And so
Yep.
when I looked at that and I said, okay, I got to change that belief. I'm becoming a better investor. If I put the time in, I can figure this out. I can work through it. I can take it step by step. That mindset shift, that that not that day, but like in the coming weeks, I started taking my day off
Mm.
and putting an hour or two into investment analysis, into my process. I started building, at the time it was stocks. I wasn't even really thinking about real estate anymore at the time. But, well, actually, it's not true. I was looking at many different possibilities, but I was
Mm.
spending a lot of time analyzing businesses at that point.
Yep.
And so over the next about year or so, that's when that quad came up. And when I did the underwriting on it, and we took the time and we went ahead and made that offer. We had made a couple other offers in the prior months, but this one finally hit. And so, yeah, like that's what kept me stuck at the time.
Mhm.
And I would guarantee, I don't care who we're talking to, anyone who is not taking the next appropriate action doesn't mean that it's going to be it's going to be the perfect next step, or it's going to just make everything wonderful for them. It's a marathon, not a sprint, as you say. But it's always some conversation, some language pattern, some belief, what I would call belief, that's causing just some kind of internal mindset thing that has them not doing what anybody from the outside would say, just do the next thing.
Mm.
So that was what it was for me.
Wow, that's amazing. So I'd be remiss if we didn't kind of touch in where's the portfolio today? What's Jeffrey and team doing today?
So right after we bought the quad in the same historic district, we also bought a triplex that was in an estate sale. And we bought that for $250 cash as well. And we have now put in total about $420 into it because it was needing a lot.
Yeah.
I mean, we had foundation, we had a new roof. We rehabbed the interior, 2 kitchens. We turned a 1-bedroom into a 2-bedroom. So it was that value add stuff that Matt does, that Lumberjack does. I don't know if that's going to be
So
something
just so
I
I'm
do on a
clear,
regular basis.
just so I'm clear, you put 70 grand of repair into it or an
Oh
additional
no,
420?
no, our total so we
Yeah.
paid $250 cash to get the property.
Okay, got it.
And then now we've spent over,
170.
well, yeah, it's like 170
Okay.
more
So you're
for a total of 4. So that's
Got
all
it.
cash.
Got it. Okay.
So we
All right.
just rented the triplex is a 1-bedroom, a 2-bedroom now that we converted that 1 to 2, and a 3-bedroom. So it's 3 units, 1, 2, and 3.
Sure.
And we've now rented out the 1-bedroom. We're working on renting out the 2-bedroom and then the 3. I mean, it's all rehabbed. We literally just need to rent it at this point. So by the time that's all rented, we'll have about 30,000, 35,000 a year in cash flow. And then we'll see what happens as as I've been listening to you talk about in terms of the market. If it could be Goldilocks for us, if a recession hits and rates continue to come down, that might be the perfect time for us to refi as well. We'll see.
Go get some conservative dry powder.
Right.
And do it again. Well, this has been a lot of fun, Jeffrey. I appreciate you. Do you have a place where people can follow you, reach out, ask some questions that maybe we didn't cover in this interview?
Sure. We're at Master Coach University. That's mastercoachuniversity.com, or anywhere on any social sites, Master Coach University, that'll come up. But I do have a bone to pick with you, if I may.
Go for it.
On one thing that I hear you say all the time, and I'm going to make an argument. I'm going to push back on you on just one thing.
Sure, go ahead.
And I even mentioned it just a second ago. You regularly say it's a marathon, not a sprint.
Sure.
Which totally I can agree. I mean, how can you not agree with that? Especially knowing the journey that we've all been on. But I would argue it's a marathon and a sprint. And I would argue that it's not just a sprint, it's many sprints.
A series of sprints. Yes.
It's like every marathon is like so many sprints stacked on themselves. And as with like the Scrum architecture that you may be aware of, it's like that 1 week or that, 1 quarter or that couple month sprint where you have a goal and then you take a lot of action and you measure that action. And then you end up at the end, there is always an end to the sprint, win or lose.
Yeah.
And you look back and evaluate how you did. That growth process, I think, it's been critical for me to focus on that short-term sprint inside of the greater marathon and inside of the greater kind of financial freedom arc as well. So that's my humble pushback on that.
I like it. I take it. It's very cool. Well, Jeffrey, thank you very much for sharing your story with us. This new Investor Series is a lot of fun. I appreciate you. Have a great weekend. All right.
I'm going. Take care.
Thanks.